I'm here to talk about ethical investment. Before I do, this is a standard slide I have to put up because there's a few performance numbers and things like that. This basically says whatever I say will be the truth, the whole truth, and nothing but the truth. My hand is up, I swear. So first I'll just give a quick overview of who we are, just in case you haven't heard of us. Then I'll talk about what is this thing called ethical or responsible investment. Sarah's talked about the need. I shall talk about what it is. Then I'll talk about typically what those sort of we sort of invest in, what sort of companies your super fund or your managed fund will be invested in. And then I'll end by debunking some of the myths. Before I do any of that, I'd like to just do a bit of an interactive survey just to find out a bit more about you. On a show of hands, just quickly, who here recycles? Great. Who here buys organic or fair trade products? Any? Doesn't have to be all of it, just any. Great, yeah. Who here uses public transport instead of their car if they can? Yeah, great. And who here donates time or money to a good cause? You know, charity or anything like that. Great. So you are a really ethical bunch. A few more questions for you. Who here has super? Should be everyone unless you're self-employed. Who here knows where it is? Okay, a bit less now. And who here knows, of the people who know where it is, who here knows that it's aligned with the same values you've just demonstrated beforehand? Okay, look, there is nothing wrong with what you've just told me there. It's actually very typical. In fact, on a show of hands beforehand, this room's a bit above average. So we're on a good start. So I just wanted to start with that. But some key points before I go on. Superannuation is the 4th or 5th largest retirement savings scheme in the entire world. It's worth over $1.3 trillion. Now, to put that into context, that's $70,000 for every working man and woman in this country investing in companies, property, infrastructure, government bonds, etc. So, again, who put their hand up against where they know their money is and it's in line with their values? There was a gentleman in the back and himself and myself and Sarah. So just imagine the impact of all your money if it was all aligned with your values, and just imagine the impact if every single room, if every single people were aligned, and the impact of that. And just think about what could happen and the influence it could have on the world if we all invested our money in line with our values. And just to talk about how easy that is to do, signing up for a super fund is really easy. Transferring your other super funds over is a bit more tricky, as we probably know. But just think about it this way. It may be a bit harder than sorting your plastic from your paper, but it's probably a lot easier than, say, cycling 20 Ks to and from work every single day. I just want to leave you quickly with that whilst we go into what this is all about. So, quicker thing about us, as I said beforehand, we're an investment and superannuation scheme. That basically means we've got a superannuation and we've got a whole bunch of managed investments. So the way to think about us is we're like a mini ethical AMP. About 20,000 investors and members, 650 million under management, 10% of our profits goes to community grants, and we're well liked by people that need to like us. You know, we've won awards and so on and so forth, but I won't dwell on that sort of stuff. It's not what we're here to do. So what is ethical investment? Well, one thing I can tell you what it's not. It's just not for her, just for her. It's actually for everybody. Anybody can get involved in ethical, responsible investment. It's just not limited to tree huggers. In fact, bad people can get involved in ethical investment, and we actually have quite a few bad people who work for ugly corporations who use ethical investment to offset their life in the same way that carbon credits can offset your emissions in your car. So it really is for everybody. And just to show the scale of where responsible investment has come from, where it's going to, this tiny little dot here represents how much money was invested responsibly back in 2000 in this country, this is Australia. So it's $325 million, which is a huge amount of money. But that little dot represents that. Now, 2010 or 2011, I can't remember what comes up now, this is how much it is sort of now. So it's gone to $16.5 billion. And as I mentioned beforehand, there's $1.3 trillion. Now, that's not actually to scale because the slide wasn't big enough. but essentially it's sort of almost 100 times the size. So there's a long way to go. Now, we've done some independent research recently just to find out who in the populace would be up for this right now. Obviously, we've got about 1 or 2% currently. We did some survey work and we found out that there's about 19%, so 1 in 5% of the Australian population either do or want to invest ethically, and there 8% or half of them basically would happy to sacrifice something. Like, when you buy organic food, you're happy to pay a bit more. You're buying quality, but you're also buying peace of mind. And the other half would say, well, I'd do it, but I'm not taking any sacrifice. I want it to cost the same, have the same performance, and everything like that. And there's a whole bunch of other people here. 19%, so another 1 in 5, they're only interested in the financial return of their money, they don't care. But if you could prove that ethical investment could perform just as well, they might be in. Then the rest of this gaggle over here, the people who don't even know where the super is. Oh. No, I'm only joking. So really, I haven't told you what ethical investment really is, but for us, it's about knowing, controlling the impact of your money. And that's the key point for us. A lot of people take super to either be an impost, if they were around when it came in 20 years ago, and it was like a bit of someone's taken a chunk of my salary away, 9% of my salary away, and telling me I have to invest it and I can't get to it until I'm 65. Or if you're younger, it's a freebie. I get paid my basic salary and then my super, an employer takes care of that. So there's a lot of people out there who, and it's very normal and very typical, that think it's not my money until I hit 65. Well, it's not, it's your money, and you have the control and power over it. So, I just want to talk about what's going on and what ethical investment's all about. Look, as Sarah talked about, there's 3 sort of parts to sort of ethical, responsible investment. There's environmental issues, considerations, there's social considerations, and there's governance considerations. Now, obviously, environmental and social considerations are pretty obvious. Governance is really about how the company's run and who's running it. A typical example for us is that we were invested in ABC Learning. Now, take away the governance side of that, and you think, wow, what a great ethical company that would be to invest in. Childcare. Everybody's having children. It's fantastic. What we failed to do, which is what we've started to do now, is we failed to look at how it was being run and who was running it. So governance is extremely important. It may be the more boring stuff, but it's actually as important as the environmental and social side of things. There's also quite a few different types of ethical investment. I won't go into too many of them, but the one you probably would have heard of is something called screening, when you basically screen out things you want to avoid, and you might screen in things you actually want to seek out. There's also other ways of looking at it, which is best of sector, where you won't actually screen anything out, but you're only investing in the ones who are doing the most environmental, sustainable, or social, giving back to society. So you might end up investing in sectors which others might screen out, but you'll pick the best one within that, the best ESG performer. There's other ones like thematic investment, and then there's other corporations that get involved in corporate engagement and activism, whereby they try and change the behaviour of companies. But the most important thing is where to draw the line. Ethics are pretty subjective. I bet every single person in this room has a different set of ethics. So it's very tricky for ethical investment companies to know where to draw the line. So that's why there's so many different types. But as you're pooling everybody else's money, you have to draw the line somewhere. And I'll just show you where we draw the line. We do a combination of negative screening and what we call impact investment, or positive screening. We also get involved in corporate engagement. Now, we do that with the companies we invest in. A perfect example at the moment is a company we've been investing in for a while now. I won't give their name away, but they're a Norwegian company, and they have this fantastic sorting technology. So it's all about quality. So they can, with this technology, they can pick out a grain of rice within a whole grain of rice, shooting down the ones that aren't good enough. And it's extremely efficient and increases productivity and quality, and we're all about quality. They've just bought a company, though, that sorts tobacco leaves. And, now they've bought the technology to transfer somewhere else, but they're not stopping down the tobacco side of things. Now it's a tiny, tiny part of their business. You know, it's minuscule, but it's still a part of their business. And you know, we have pretty much a zero tolerance to anything related to cigarettes and tobacco. So we've engaged with that company just now because they've just bought them to see whether we can get them to sell out of it. So that sort of corporate engagement activity that goes on. We're not just going to get out straight away because that's just childish. We're going to engage with them, see what we can do, and then if they don't change their minds, we'll move on. Most responsible investors will probably have some sort of chart or some sort of list of things that they base their decision making on. Ours is quite complicated. There's a whole bunch of things that we seek out and a whole bunch of things we avoid. The best way to describe it, though, is we actively seek out investments that support the environment and society, and we actively avoid investments that harm. Just to give you an idea, and this is pretty much the same for most screeners, these are sort of areas that we include, you know, recycling, efficient transport, energy efficiency, clean tech, and these are the sort of things that you tend to avoid: weapons, tobacco, uranium and coal mining, animal exploitation, and so on. The most important thing when you're really looking at your own money is to always check the label and see, you know, if your super fund or your investment manager is certified by RIA, they have a obligation to disclose their portfolios, and their portfolios is basically the list of the companies your money's invested in. And it's really key for you to have a look at those portfolios and find out whether the companies that they're investing your money in actually line up with your own ethics. And just see whether, you know, if you don't like coal mining, just see if Rio Tinto and BHP or any other resources companies are in there. If you don't like pokies, then just see if Woolworths is in there. That sort of side of things. Always check the label. Third section, I'll just quickly run through a couple of examples. I've talked about that Norwegian company. There's a few more here that I'll give you a typical example of what we look at. Like, it's not just about the ethics, you know, just like any other financial company, we're trying to look for the companies that are going to perform the best, because our main responsibility is to the people who invest their money with us. You know, they want to have a secure retirement, and we can't do that by not looking at how much money these companies are going to make, as well as their ethics. Here's one. This is another overseas company. They seem to have all the best ones, only in terms of examples wise. It's a chemical-free cleaning. Now, those things have come in there because we did this talk in front of a whole bunch of engineers, and when we said chemical-free, and it says they use water, I said, well, water's a chemical. Right, good point. Pedantic lot. I hope there's no engineers here. Basically, this company, you may not have heard of them, but when I show you the next slide, you will definitely have seen them around. The way to think about it is, there's your Ajax spray and wipe. Now, I don't know if everybody knows this, but if you actually want to clean with an Ajax spray and wipe, you have to spray it and you have to keep it on there for at least 20 seconds. Otherwise, all you're doing is wiping around and smell. If you actually want to disinfect and kill that 99.9% of germs they tell you on the adverts, you have to leave it on there for 10 minutes. So you have to spray the kitchen and walk away for 10 minutes and come back and wipe it off. Otherwise, all you're doing is spreading around the smell or cleaning. To actually kill the germs, 10 minutes. And I doubt there's anybody in this room, including myself, that would spray and leave it for 10 minutes and come back again. So pretty much you're buying that stuff and you're wasting your time. Now this stuff over here uses water. It's ionized water. I won't get into the technical side of things because that's not my game. But essentially what it does, it just breaks down the germs with a 2-second spray. Now we have one of these in our office. Now, look, it's a gun. It looks like a gun. You fill it with water, and it costs $150 this thing, but you literally only have to buy one of them, and that's it. Don't need any other cleaning products, and you spray it on surfaces. It does this to the germs, and then you just wipe it off 2 seconds later. Now, this company here actually operates more on an industrial scale, so they haven't really broken into the residential market, but when they do, look out. But you probably would have seen all these machines around in office blocks. That's essentially what it's doing. It's cleaning with water. And that's amazing. Now, that's the ethical side of things. Now, here's the financial side of things. This company developed this technology about 5 years ago. And as you can see, their group revenue hasn't really changed. But their revenue share of this sort of technology, ECH2O, has just skyrocketed, and it's now their entire business, pretty much. And their profits have just gone skyrocketing. And we didn't come in here, which would have been fantastic, but we came in up here. And so that's the sort of thing we look at. We look at, and all responsible investors will sort of be doing this. You don't just look at the ethical and the environmental and social factors, you also look at the financial factors. And you're trying to pick the best performing companies within whatever sector you're looking at. This next one's a bit of a scare story, really. Sarah's talked about renewable energy and the end of oil and all that sort of side of things, which is exactly true, it's perfectly true. But again, I'll reiterate the point of responsible investors is to manage your money, to make sure you've got a secure retirement. Now, wind and solar, as you can see, they're going gangbusters. They really are. Look, this is the capacity of wind and solar. This is the production capacity of wind and solar around the world. And essentially, to see it, right now, we're up to 8 times snowy hydro on solar and 11 times snowy hydro on wind. So, as you can see, fantastic. And quite frankly, let it continue as far as possible. So we're 100% renewable energy as soon as we can be. Now, the problem is, the stocks aren't performing very well. Now, lots of crazy lines in this chart. Basically, these are all indexes that basically are a proxy for how well the industry is doing from a stock market point of view. The black line here is the MSCI World, which is basically a global index of all companies. That, since the post the GFC low in the last 3 years, has performed 70%. So it's gone from this point up to that point, essentially. The ASX 200, which is the dotted line, that's our own Australian top 200 companies. That's performed 28%, so not as well as globally. And that's essentially that dotted line through there. These two here, Ardor Solar and Bloomberg Wind, well, they are what they say they are. They're proxies for solar and wind industries. Wind has pretty much moved nowhere, and solar's dropped by 69%. So if you were invested in solar, you would have pretty much dropped 70% of your money. Now, the reason for this, and this is something that ethical and responsible investors know, is, well, there's two reasons really. Government support for, and China. China have got into this in a big way, as you mentioned earlier, and what China are very good at is spending a huge amount of money and not wanting anything back because they're just trying to buy market share. So they've driven down the marginal cost of producing wind and solar so low that you can't actually make any money out of it anymore. So profit margins are now negative. So it's a loss leader for them as they try and swallow up market share. That's how they get big into it. On top of that, with the austerity measures coming, especially in Europe, you've got countries like Spain pulling back on renewable energy subsidies. And there's a little stat for you. It's ridiculousness of what governments are doing. Fossil fuel subsidies are 12 times the size globally in terms of absolute dollars spent than renewable energy subsidies. But fossil fuel energy consumption is only 6 times. So even if you did a dollar for dollar, power for power, renewable energy is getting half the subsidies it should be getting. But quite frankly, it should be flipped on its head. But unfortunately, most fossil fuel companies have got lots of deep pockets and lots of lobby groups, and they have a lot of politicians in their pockets. So what I'm trying to say here is that responsible investors, they're out there to, invest responsibly, but also to look after your money responsibly. I can't reiterate that enough. So whilst, the media and everybody else might be saying solar and wind is fantastic and everybody's agreeing with it, we won't invest in it unless it's making money. A few myths, which I'm sure a lot of you will know or think you know. Myth number 1, ethical underperforms. Well, you can't make money when you haven't got, all these companies to invest in. Well, thanks to REA again, they're very good at this. They did a study, they have an annual study, and they look at the responsible investment funds, RI funds, versus the average fund, which is the mainstream fund. So every fund out there, basically. And this is the ASX 300. So again, broad share market. And this is 1, 3, 5, and 7 years. And essentially that's 12 time periods or 12 comparisons. Every single one, apart from this one here, the average responsible investment fund has outperformed. So not only is ethical performing just as well, it's actually outperforming. So, you sort of say, what other excuses have you got? And this is net of fees, by the way. So this is after all your fees are taken out. Oh yeah, we're doing quite well too. Ethical is too risky. Now again, RIA haven't got data on this one, so we had to use our own data just to give you an idea, but you can essentially get the same idea. The blue line is the S&P Small Industrials Index, which is essentially the index for one of our funds. The green line is our fund, and the yellow line is the S&P 200, so again, the broad index. What this shows on the left-hand axis is volatility, so eventually risk. So all this up and down, volatility, so you have plus 10% one day, minus 10% the other day, that's volatility. And the higher up the volatility, the more risky it is. So you just don't know what's going to be happening day to day. Blue line, that's the small companies, so fair enough, you'd expect that to be up there. But what it shows here is that our smaller companies trust, and this is probably our riskiest fund, but our highest returning fund, has exactly the same risk profile generally as the broader share market. Now that broader share market is a proxy for most of the other mainstream funds out there. And most of the mainstream funds out there will be invested in the top 200 stocks or most of the top 200 stocks. So again, ethical isn't riskier. In fact, I'll prove later on, or show later on, it's actually probably a little bit more conservative. And also, when it comes to risk, which one of these do you think is more likely in 10 years' time? Filling up your petrol at a gas station or plugging yourself in? Myth number 3, ethical investors don't invest in the resources boom, so they're always going to lose out. Well, the first myth was busted, but I just wanted to reiterate this one. And this is about risk as well. This is our flagship fund again. You could put any responsible investment fund in there generally. Well, most of them, there's some of the responsible investment ones actually invest in these guys. But that's up to you to look up and see if you like that. But this just shows the top 2 resources companies and then a broad resources index, which is the ASX, any resources company in the ASX 200. And it makes up a very, very large amount of it. What this shows is that over a long-term period, the numbers are pretty similar. Right, so over a long term, you probably do in resources just as well, or as you would do in ethical. But what it does show is that over shorter time periods, you've got high degrees of volatility. Last year, these guys went down by 30%, and that's pretty why most people's super funds haven't really gone anywhere. Over 3 years, and these annual figures, Rio did quite well, but everybody else went backwards. Over 5 years, well, everybody's gone backwards because that's pretty much the GFC, but some things have gone further. Now, on the other side of this, the 7 years prior to this, you might have the completely opposite answer. Those numbers at the top might be, low, these might, or, relatively double digits, but these might be plus 30. But what that shows is, well, over the long term, you don't actually need to be in a resources boom, and if you are, you're going to have massive volatility returns. And this is more pertinent for maybe the older people in the room who are nearing retirement or in retirement. One thing you don't want is volatility of your money. You want you want growth, and you want a little bit less volatility, and you want to be a bit more defensive. And you can do that through ethical investment. Now, you still have speculative stocks in ethical investment. You can be in biotech companies that are producing drugs that are going to cure this, that, or the other. And they're pretty speculative because they don't have any income just yet. But mostly ethical investment and responsible investment investors will be in what we call defensive type of stocks. And they're also, as Sarah pointed out, if you think about the long term from a risk point of view, you're also, I've taken a slide out, but there was a slide in here about BP, and it says, wouldn't you prefer to avoid blow-ups like that? If you think about the long term and the risk and the volatility and performance, You know, defensive stocks are also being conservative as a responsible investor, as you avoid those big blow-ups whereby, you know, some massive disaster can happen and the share price tanks by 50%. So I just want to leave you with what we believe and what probably most responsible investors believe, and that is your investors can make you better off, but they can also make the world a better place to live. And if you can combine those and have a nice, safe retirement, then why wouldn't you invest responsibly? Thank you.